Greetings. This is the Market MRI Pro nightly update. This is marketmripro@gmail.com, and I title this A Shot Across the Bow of the Bulls. It is October 22nd, 2024, and we're doing this about 5 hours before the market opens. As always, this is an educational service only, and we are introducing a new tool which is in beta testing called the Market MRI Pro. Everything's for education. Anything I talk about should be considered in the spirit of education, not investment advice. I use this video to demonstrate the tools of top-down analysis. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. And I may own or sell any stock mentioned in this report. And trading stocks and options should be considered risky, and you should consult with your financial advisor before taking trades. All right, done with that stuff. Now let's take a look at the markets. So we did see a sell-off, at least in the non-Qs on Monday. You could see a small red candle inside bar on the spiders. A little bit deeper red candle down, almost reversing the prior week on the Russell. The diamonds reversing off of all-time highs, as did the spider. The Qs held up, probably a lot to do with NVIDIA and Apple. When I look at the weekly timing model, if I was to see a change in the model, it's irrelevant until the bars are closed, which wouldn't be until Friday. So we could drop down to the daily model. And I'm still on a cruise ship, which means my internet is incredibly slow. So take that into account when it looks like it takes a while for these things to update. So when we look at the daily model, you could see down here in green that we're still in a buy on the daily model as well. And you can see in this green bar how the stocks at 13-week new highs versus new lows, the new highs markedly reduced. And that tool, which was showing over the last week or so that we were getting extended, has eased. So that's one positive thing of the sell-off that we saw in the market on Monday, the 21st. When we look at the market briefing tool, and we start with, we can start here with what we call the breadth view. And I really just looked down here in the lower right-hand corner, and there were no new signals that came in. We are seeing something called the BANGO, which is this mark down here showing up on the NYSE. And the BANGO, all it tells me is it's some bullish exuberance to the upside. And it can occur and can last for a while. So I don't put a whole lot of weight on it, except it just tells me that the market does have perhaps excess bullishness in it. If we look at the performance view for the 21st, we could see one-day close, diamonds down 0.76, Russell down twice that, 1.57, and the spiders down just a tad at 0.16. And the sole winner was the Qs up 0.2. The volatility was up a bit, up 0.23%. Over here, you could see that the Qs and the spiders finished in the upper part of their closing range, where the diamonds and Russell at the bottom of their daily range. Still have lots of new highs and new lows. When we look at one-day change, we could see technology actually led. Remember what I said about NVIDIA and Apple. And down here, we could see silver, gold, semis, aerospace, gold, artificial intelligence. So it was semis, but those precious metals have been doing extremely well. Updated a little bit this tool so you could actually see what percent in the bar. But you could see in the S&P 1500, all the sectors were negative. 11% of the industries were positive, and only 15% of the stocks in the S&P 1500. I really like looking at the S&P 1500 because it includes the large cap 500, small cap 600, and the mid cap 400. So it really gives you a good overall look at the market. When you look at stocks above or below their midline of their Bollinger Bands, we're at 53%. We're getting kind of neutral on the S&P 1500. The NYSE, the same analysis. Again, all the sectors were negative, only 9% of the industries. 20% of the stocks were up, and the midline similar is at 52%. And then the NASDAQ did have one sector positive, 18% of industries were up, 29% of stocks, and 55% on the above midline. So definitely weakening. You could see the gray bars, which was the prior session's bars on sectors and industries, definitely showing some weakening there. Still lots of new highs and new lows. And then the bucket view, and I mostly use this to get a gestalt of are the markets moving up or moving down. So the wide gray is a week ago. The narrow gray was 1 day ago, which would have been Friday. And the red was Monday because we're going into Tuesday, even though I'm going to Tuesday dinner in a bit out here because I'm in the 12-hour different time zone. And what you could see is the stocks at the higher part of the Bollinger Band significantly dropped, and those at the bottom increased, but nothing is at a level that screams, I'm so oversold, I'm going to reverse. That's all I take from this, and I move on. If I go into the ratio charts to get an idea if there's anything that was working, these are going to be ratio charts comparing whatever is in the center here. This is Bitcoin. The rest of them are the spider sectors versus the spider itself. And think about what a ratio chart is. It just shows the relative performance of what we're looking at versus the spider. The spider could be up a lot. You still may have things that are outperforming or underperforming. The spiders could be down a lot, and you could have things outperforming. So what do I see here? Industrials have been leading the way. Staples, no. In fact, you have to wonder about maybe this isn't a bad market if the most defensive sector is showing the weakness, as is healthcare, which can be defensive. Discretionary looks good. Bitcoin's obviously been on a nice run. So discretionary and technology looks good. Actually, not discretionary, rather technology looks good, and industrials are the ones that really stand out. Financials, which had been strong, really, I'll just say they laid an egg on Monday. Now, as we dive deeper and we look at the markets, the most important piece to me is the JAS layout. And the JAS layout, I like to use my list, which is 3,384 stocks, which basically takes the stocks in the S&P, in the NYSE and the NASDAQ, and then puts a price and volume filter on them. But kind of loose, anything over $1 or over, I think, 100,000 shares to get rid of non-trading stocks. If I want to see what had the best performance on the day by percent, I'll double click on percentage. And then you could see, stock that I'm not buying, nor am I flying on the airline, Spirit Airline, was the leader here, and it'll pop up. And again, consider the fact that I am on really bad internet here on the cruise ship. And there you go. And you could see here's a stock that's been in a massive decline. Both the bongos flipped. You see a 0 for the high-low jump, so we know it's not extended. You can notice everything changed colors. The EMS signal, the CPR signal, and then gap, volume, breakout, momentum, PSAR reversal, and relative strength and OBV look great. There was some financing that came in to support SAVE. Of the bigger stocks here, NNE, Nano Nuclear Energy, I think this plays into the theme of uranium being strong right now, Amazon and other big tech companies investing in these small nuclear reactors that they can use to perhaps power some of their AI work. And this is a recent issue. Don't know anything about it from a fundamental perspective. But to me, the best way to look at the market is from a top-down perspective. So by clicking on top-down, I bring up all the sectors. And so what we've done is we've taken those 3,384 stocks, and they're all assigned to the sector. And then based upon what sector we're looking at, they're also assigned to industry groups. So communication services, all of them were down, but this was the one that had the highest of the JF, which is a Jeffrey's version of the force, very different than the traditional force. We have short, medium, and long-term looks. So let's just look at communication services. So I'm clicked on communication services. What opens up here, and I'm going to rank them by Jeffrey Force. What opens up here are the different industry groups, and down here are the 158 stocks that are in it. So if I just keep the theme of the JF short-term ranking, and I look over here, what comes to the top is probably one of the strongest stocks in the market right now, and that's Netflix, which has had great earnings. Talked about it before the open on Monday. Unlike Intuitive Surgical, where it was giving me the extended signals, I thought this one could go higher. It was up again, another 1% or $8 in the market on Monday. Spotify. Spotify is a stock that frankly, I don't understand. I know what they do. I just don't know anybody that pays for it and how do they make money. But what a powerful uptrend. And you could see sideways move and getting ready to break out. Didn't have any dots, but it was the second best performer below Netflix. And then TDS is a telecommunications stock, telephone and data systems. And you could see it was not very strong on Monday, but because of the strength on Friday, it still kept the JF up. Now, another way of looking at it might be, well, let's just look at stocks that are up, have had up signals. So my up signals are my four bottom dots, the gap, volume, breakout, momentum. Why do I use those? Because I've studied stocks for 30 years, and there are very few big moves that don't occur that are not preceded by or at the same time as these dots. So let's just look at MGOL. This is a cheap stock. I don't typically buy stocks at this price. Let's have it pop up. Again, it doesn't take this long if you're on real internet, and I'd skip this right away. Doesn't look that impressive. What's Lee? Lee Enterprises Incorporated. Wow, powerful downtrend. I'd have to know more about this. Had a big breakout, then a pullback, a little bit of a flag, and a breakout again. So another way is to look at the presence of these up dots. Now, I can look at the individual industry groups. I can look at it as a sector level. If we wanted to look at technology, for example, technology, XLK looked pretty good, even though technology itself was down 0.37%, not very much down. These are the different technology groups. If we look at them, the best JF is computer hardware. I click on computer hardware, and I'm going to bring up the stocks that are in computer hardware. And then I could start to analyze these. And notice a lot of them have up dots, very few have down dots. What comes up to the top is LOGI, which I think is probably Logitech International. And let's see if it's got a decent looking chart or not. Well, I can't wait to be back to the US with decent internet. Here's one that does look interesting. Big uptrend, pullback, kind of a wide base here, but breaking out. Look at the volume coming in the last several sessions. You got breakout and momentum, relative strength, and OBV look good. So I could start to drill through the stocks using the top-down view. Now, if I go back to just the impulse view, which is my bigger list, another tool that I'll use is I've pre-built a number of filters. So I'm going to drop this down here, and I'm going to look for 2 days up K-force. Don't know if we're going to get any, but this is a momentum indicator, and I have found that when I've seen this fire on multiple times in a row, that I find stocks that are attractive. Now, a lot of cheap stocks are here. Let's just see, rank them by up now. Let's take a look. GAU, very cheap stock. Again, I don't buy cheap stocks, but here is a beautiful chart. I mean, would I buy this? No, it's $1.64. But here's your uptrend, your pullback to the 200. We call the white, which is the 50-day free parking, and we gapped up off the 50, certainly not extended. Massive volume the last two sessions. I might look at this. I'm going to skip Veristem. Let's look at Grab. And again, a low-cost stock, but in an uptrend, pullback, and a breakout here, which is the pattern that I look for. So just wanted to show you a few of the tools I'm looking at. I'd be very careful in the market right here, expecting a soft open, and then we'll see where the market goes. More to follow, and I promise you when I get off of a cruise ship, you'll see those charts pop up much faster. Have an awesome session in the market today.